Every metric that I'm looking at right now tells me that Bitcoin is going lower. Gold is soaring. Bitcoin is getting rejected at a key level. The pre-market for stocks are red. There's likely to not be any rate cuts. And interest in crypto is at an all-time low. In today's video, we'll be discussing all of these metrics. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. You know I always like to look at gold to tell us how risk assets can be performing, and right now, gold is starting to soar once again, likely preparing itself to put in a new all-time high. When gold is soaring, it is traditionally not positive for crypto. I know that Bitcoin is seen as this gold of the 21st century, but as I've repeated myself in several videos, I don't think that we're quite at that stage yet. And so if gold continues to soar, stocks will likely go down, and that will likely drag crypto with it. Now, if we take a look at the Bitcoin chart, what are the key levels that we are now below? That is the weekly open and the monthly open. Let me zoom in and you can see right here, the yellow line and this red line. Since we got rejected from the previous breakdown point, it is not looking positive for Bitcoin. We cannot ignore this. Right now, we do have some very key support levels. That is 93.7K, which as we can see, we tapped into and held as support yesterday, but now today's candle is looking relatively bearish. Right below that level, we also have the yearly open, which is right around $93,300. Break that level and it's likely that we are to head much lower. Now, the all-important level that I want you to keep your eyes on is 91.8K. Not just because it's the bottom of this range which held as support before we went ahead and put in an all-time high, but also because we have a CME gap right around that level. So if Bitcoin falls below 91.8K, as I said in yesterday's video, I do think that at the bare minimum, we will find our way back into the mid 80K region. And of course, this would be detrimental to altcoins. Now, the next thing that I want to show you is the stock market. We can see that thus far, we are not quite making it back up to the 200-day moving average, which I brought up as a potential rejection point. But so far, everything is telling me that we are seeing a potential repeat of back here in February 2022, where this move started, and then we went ahead and chopped around and made it much lower after the 200-day moving average kept on acting as resistance. Again, my stance will change if stocks can make it back above this 200-day moving average and hold it as support. This would fuel Bitcoin higher. We also have the fact that the Florida Strategic Bitcoin Reserve bills are now canceled. We can see here that these bills, which sought to establish a state-hold Bitcoin fund, will indeed not advance. Here we can see highlighted in yellow that the last action for these bills is indefinitely postponed and withdrawn from consideration. Not what I'd like to see. Now, pre-markets for stocks is indeed red, with the S&P 500 futures currently down 0.75%, the NASDAQ down more than 1%, and the Dow Jones down just over 0.5%. Also for stocks, we are now in a greedy period, which is interesting to see after 9 consecutive green days. The last time we got that performance was back in 2004. An interesting perspective that I want to give you on this trade deal and how it impacts the market comes from Income Sharks on Twitter. Here we can see, once trade deals are announced, the market probably sells off if it hasn't before then. Then people will be confused and surprised that tariffs aren't the reason we've been dropping. Tariffs are the distraction, the easiest thing to blame. Bad earnings, tariffs. Layoffs, tariffs. Now, what is meant here? We know that 2 years ago, the unemployment rate already started to rise. Are we really going to blame the most recent tariffs for that? As we can see here, we started to see a pretty big uptrend. Then we also have the fact that 5 years of national debt has been rising at record levels. Is that because of tariffs as well? I don't think so. We can see that this chart is basically parabolic. And consumer credit card debt reached over $1 trillion in 2023 because of tariffs? I don't think so. So this is something that you should be considering because the economy was already looking weak for the previous years. And yes, we can climb up that wall of worry, but perhaps this lackluster price performance for both Bitcoin and stocks is trying to tell us something. And it's not just because of tariffs. The other thing that we need to bring up is that we have the Fed meeting tomorrow, and there's a 98.2% chance that rates stay the same. Now, if we get a surprise and they go ahead and cut rates, I'm sure that stocks and crypto will likely rally, but looking at these probabilities, it is highly unlikely. One thing that you do need to consider this week is that Jerome Powell will be speaking, and whether he comes across as dovish or hawkish, it will likely impact the markets significantly. So keep your eyes on his speech. I will make sure to keep you covered on the channel. Something else that I just wanted to show you is that there is literally no one paying attention to crypto at the moment. As we can see, the crypto search term for Google Trends is basically capitulating, as we can see on this chart. And we also have the social risk, which you know I like to talk about on this channel. The latest value is literally zero. Zero. That means that across social media, almost no one is paying attention to crypto. And if you're a huge altcoin fan, you want to see this metric skyrocket because that usually tells you when altcoins are starting to perform really well. From my perspective, this also tells me if it will be easy or difficult to grow across social media, especially because I've been posting crypto content every single day. And right now, the growth is slow because there's basically no one tuning into the space. But as I've said before, the caveat is that if you've been paying attention to crypto right now when no one else is, you'll likely be rewarded when everyone else comes back. So make sure you're staying locked in when the market is choppy as it is. So we're in a little bit of a tricky predicament here because the haphazard rollout of President Trump's tariff policies threatened to put the Federal Reserve in a lose-lose scenario, which we've been covering on the channel. Either they have to navigate a recession or manage a period of stagflation. And of course, neither would be positive for asset prices. Now let's take another look at the Bitcoin chart. What are the key levels that you should be trading? First of all, we do have the yearly open, which we talked about at the beginning of the video, which is this blue line, but ultimately right around this region, 93.7K all the way down to 93.3K, you want to see us hold as support before we can hopefully have another go at breaking this key box. Now, if you're new to the channel, the reason why this box is so important is because it was the previous breakdown zone. We chopped around this box for several days before Bitcoin went ahead and dumped and put in that new low all the way down to $74,500. But I've been very clear with you, for us to target a new all-time high for Bitcoin, we need to hold this previous breakdown zone as support. If not, I will continue to consider it as resistance. And of course, if we break down below 91.8K in particular, Bitcoin will likely be going much lower. I've been very clear with how I'm navigating this market on the channel. And a lot of you have been saying, oh, we can either go up or down. Thanks, great analysis. But the reality is trading is a game of probabilities. Overall, the macro doesn't look too great. I'm no macro expert, and so I resort to using TA. And what I see here is that if we can't break above this box, Bitcoin will continue to get rejected and will likely move lower. This is why you should be managing your risk accordingly. And this is also why the huge majority of my spot portfolio is in Bitcoin, because I still think that altcoins will continue to get decimated. One thing that was a little bit disappointing, I must say, was that yesterday, the 60-day executive order for the Strategic Bitcoin Reserve expired, and we didn't get any kind of announcement from the president or his staff on this executive order. Just to remind you what this meant, President Trump signed an executive order to establish a strategic Bitcoin reserve using 200,000 Bitcoin already held by the US government from forfeitures, aiming to position the US as the crypto capital of the world. The executive order mandated a 60-day evaluation by Treasury Secretary Scott Bessent due on May 5th, 2025 to assess legal and investment factors for the reserve. And according to Grok, since we didn't hear anything from them, the most likely outcome is that the US Treasury submitted its evaluation report on the strategic Bitcoin reserve, fulfilling the executive order's mandate. However, there's no evidence in the provided data that the reserve was officially established on that date. So I'm not sure if we can really trust this. I mean, I hope it was submitted and I hope they took action on this executive order, but until they actually confirm anything, I'm not that convinced. And just quickly before I wrap up this video, I did want to share a way that I've been making money even in these brutal market conditions. And that is to short shitcoins. If you've been an early subscriber, you know that I've been talking about shorting shitcoins on the channel for a very long time now. And yesterday we actually talked about Gork, which was the parody account for Grok. Elon Musk was posting about Gork, and of course they went ahead and launched a new token. Now, once that token looked like it was topping out, I went ahead and shorted it, and as we can see here, I'm at a 200% gain on weeks. If you want to trade these tokens, you can sign up with the first link in my description down below, bringing you directly to weeks, where you can also earn that 20% deposit bonus. This bonus is very handy. That means that if you deposit $10,000 into your weeks account after signing up with the first link in my description down below, you get $2,000 back for free for trading. And all you really need is an email and a password to sign up. So I started shorting this right around 0.06721. And if we take a look at the Gork chart, after we had this major wick to the upside, I thought that this would be an excellent opportunity to enter a short. And as we can see here, right at this white line is exactly when I entered that short position. And then I went ahead and posted my tweet with my current position right around this level. So you can see that there's still ways to make money in this market, and I have been reading a lot of your comments. Soon I will be publishing a video talking about exactly how I go ahead and short shitcoins, so make sure you're staying tuned for that. But in preparation to this, go ahead and sign up to Weeks, which is the first link in my description down below, because that is the exchange that I use where they go ahead and launch all of these shitcoins before other exchanges. And that sums up today's video. We will likely have a very volatile week with Jerome Powell speaking and the interest rate decision. Bitcoin is still at very important levels, and if we can't break above this previous breakdown point, I do think that Bitcoin will likely be heading lower, but in the meantime, it will also probably chop out a lot of traders. Apologies for my voice in this video. I'm feeling a little bit ill, but I hope you enjoyed the content nonetheless. If you did, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.